breaks below the 50 DMA. Right now, we are still above those 50 DMA levels for the IT index. So I would wait out for a point where the IT index retraces back towards 50 DMA, try and go for a contra buy and assess whether the bounce back is quite sharp enough. But on the short term side, I would still believe that the trend is not very negative. I'm not saying extremely positive, but not very negative as the street is signaling for the IT index.
Okay, not all that negative. That's the take from Kunal, at least on the Nifty IT charts. But let me also welcome on board Rajesh Palviya and find out what he's making of the markets right now. Rajesh, hi, morning. So far, so good. We've managed to show resilience amidst global weakness. But do you sense that it's going to rub off on us at some point?
Good morning, Aisha. Good morning, everyone. It's a controlled profit taking which we have witnessed in previous day. Looking at the setup for Nifty as well as for the Bank Nifty, both indices are holding about 20-day moving average, which is a sign of strength on the near-term chart. So we believe that till Nifty is holding about 25,800, 750 zone. There is no as such worry in terms of structure for the Nifty. There is a call writing activity at 26,000 strike, which is consistently, adding call writers at 26,000 strike. So that level needs to taken out by the Nifty on a, with a decisive volume action. Then we could see some substantial short covering action. Till the time Nifty not able to surpass 26,000 level with a decisive breakout, I think we may see some range bound activity in the Nifty, could be 25,800 to 26,000. But looking at the broader market, we believe that sooner or later there is going to be a breakout about 26,000, and then I think in the current series itself, we may move further higher to 26, 200, 300 zone also for Nifty. So buy on dips would be the strategy for Nifty. Also keep stop loss at 25,800. Bank Nifty is looking more promising. The way Bank Nifty is continuously holding about to 58,500, 600 zone. I think here we could see furthermore, traction on the higher side and possible rally towards 59,200, 300. We may see in this current series itself. So Bank Nifty, one can hold long position at this juncture. 58,600 needs to keep as a stop loss.
Okay. So that's on the Nifty, the Bank Nifty. Rajesh, your picks for this morning?
So first stock is from the pharma space, that is Biocon. If we analyze the long-term structure, stock managed to give breakout on the multiple resistance zone on the weekly chart, and the way stock has broken out on the weekly chart, we believe that this stock has potential to extend its gain. 435, 445, we are projecting target for next couple of days. On the downside, 412 needs to keep as a stop loss. Another stock where we are focusing at this juncture is from the NBFC space, that is Shiram Finance. After a brief corrective move, now stock again, shown a sign of buying interest in last couple of days from the lower level. So we believe that, once stock manages to cross over 826, here we may see a rally to unfold towards 850, 855 zone. So one can buy Shiram Finance for target of 855. On the downside, 806 needs to keep as a stop loss.
Right, okay. Unilever, that's also going to be another stock which is going to be in focus this morning. As interesting analogy there, both on Unilever as well as, the entire FMCG pack. But just looking at the screen, and yesterday the one stock which was in a tizzy was GMR Airports. One of the lead brokerages did come out with a buy call on GMR Airports, stating that they've delivered a standout EBITDA beat despite soft traffic figures in Q2, talking about as to how the EBITDA was boosted by new tariffs, a strong non-aero growth and adjacent business scaling as well. And the traffic softness because of the Delhi upgrades, airline capacity cuts that they see weaning off, and they expect a recovery in the second half. Rajesh, wanted to get your sense in on the breakout on GMR Airports and where could the stock head next?
So very strong breakout on the weekly as well as on the daily chart, and now stock is able to surpass its July 2024 swing high also. So looking at the breakout, we believe that if stocks continues to trade above 100 mark, I think the next target would be around 112 to 115. Again, in the derivative data also, we have seen a long addition. So long built up was there in the data also. So I think one can hold on the position at this juncture. 99 needs to keep as a stop loss. Projected target 112 to 115 in the near term perspective.
Okay. In the meantime, Tata Motors, the passenger vehicle segment as well, is going to be in focus. Citi has stocks which held out and very specific movers at that. Asian Paints, there was Axis which looked good, and Bharti, of course, maintained its leadership. And I'm just talking about the large cap pool here. But Asian Paints, Rajesh, what's the reading on the charts? You think the rebound is going to sustain?
Action attracted by this counter in last couple of days, and the way stock managed to give breakout on the monthly as well as on the weekly chart, it clearly shows that yes, a trend has shifted on the bullish side, and after a long corrective move and consolidation, now stock has shown very good sign of buying interest in last couple of days. Looking at the breakout, we believe that till stock is now holding about 2850 mark, I think trend is likely to exhibit on the bullish side, and possible rally towards 3000 we may see going forward in the coming days. So I think one should remain on the long side of trade. 2850 needs to keep as a trailing stop loss at this juncture.
Well, talking about paints, while of course it was Asian Paints which held out very smartly, but then there was HDFC Mutual Fund, which in the bulk deal data was seen buying into Akzo Nobel as well. But
Rajesh, QSR, does that pocket also interest you? Because that's also one story which is a bit forgotten. So just taking a cue from what Parag has said, do you like some of the QSR names?
So I think there is some consolidation and corrective move is happening in most of this QSR stocks. So I think maybe we could see some more consolidation for next couple of week for this counter. Though we have seen a very strong rally in last couple of week, be it Swiggy, Zomato, or Devyani. All these stocks have shown strength in last couple of months, but now some consolidation is taking place. If I describe Eternal. Stock is now trading near to its important support area, which is placed at around 300 to 295 zone. So I think in this corrective move, stock able to defend this level. I think again, some interest on the buying side would be there. 290 needs to keep as a positional stop loss for Eternal. So trend is still on the bullish side for medium term to long term perspective. So here one can deploy some buying trade in the decline. For Swiggy, I think we should wait. 415 needs to cross. Once stock crosses those level, then yes, here also one can attempt to buy. 415 is the immediate hurdle for the Swiggy. So once it crosses, then possible target towards 440 we may see on the positional perspective.